Hello everyone, my name is Sriram Iyer. I'm an analyst at the Commodity Research Desk at Reliance Securities. Welcome everyone to this week's Gold podcast. Prices were extremely range bound this week. Initially, prices did see some gains supported by the weakness of the US dollar. The dollar continued to extend more weakness from last week after a dovish speech from Jerome Powell last week and slightly underwhelming data during this week. A report on the US labor market missed expectations by a very wide margin, while US consumer confidence also fell to a 6-month low in the month of August as worries about soaring COVID infections and higher inflation dimmed the outlook for the economy and weighed on the dollar. So this actually kind of lifted prices initially, but during the midweek markets gave back most of its gains and is trading slightly on the weaker side this Friday morning and in the early afternoon session. Prices moved lower from the higher levels as investors showed caution in the run-up to the release of the key US jobs report expected out due to tonight. Of course, the next week, the key trigger point for the markets will be the non-farm payroll data tonight. Till the data, we expect the markets could remain range bound, but according to a Reuters poll, the labor market non-farm payrolls report for the month of August is expected to show 728,000 jobs were created, and this, if this number is slightly weaker than the poll, we expect that the upside will remain intact and bullion. However, if the data is extremely bullish, we see that, or in fact, if the data is better than in the month of July, which saw about 943,000 jobs creation, we could see that the bullion markets will remain under pressure in the last trading day of the week. So, on the charts, we feel ahead of the data. Spot gold on the international side could remain within the range of 1800 on the lower side to 1820 on the higher side of things. After the data, it depends how the data comes out, of course. If there is a big negative surprise on the data, we see that the prices could test initially 1850 levels. 1850 will be a crucial level to watch out for. If 1850 is broken, I think 1875 or even higher levels from there can be expected. But again, at the same time, if data is better than expected, and I mentioned earlier, if it's better than July month, then we can see the markets will move back towards 1775 or even possibly towards 1750 levels going forward. If the numbers are in line with expectations, market could trade within a broad range of 1775, 1760 on the lower side to 1845, 1850 on the higher side next week. On the domestic side, MCX October could remain within the trading range of 46,970 to 47,150 ahead of the data. And like the markets, international markets, markets will depend on the non-farm payroll due tonight. Important resistance is at 47,300 and a break above will push the prices to 47,600 or even higher from there. At the same time, if important support of 46,775 is broken during next week, we could see markets move back to 46,500 or even lower than that towards 46,300 in the coming week. So I think it will depend on the non-farm payroll, of course. Apart from that, on the economic calendar front, it is a pretty thin week next week. The major trigger point for the markets will be from the European Central Bank meeting on the weekend next week. So I think all eyes will be on that. So thank you for listening. Have a pleasant day and a week ahead. Thank you.